In this video, I'm going to explain and show you an example of why you need to be careful who you hire to prepare your tax return. This past tax season, a new entrepreneur provided their tax return to me, and it just blew my mind at how many things were done wrong, and I just want to make sure you don't have an experience like this. So by the end of this video, you'll be able to identify some of these items to make sure they don't happen to you. If it's your first time watching, my name is Navi Miraj. I'm a CPA that educates entrepreneurs about tax strategies that can save you thousands of dollars. So if you get value out of this video, please consider subscribing and perhaps clicking that like button. So let's jump right into it. I'm gonna actually share my screen with you here in a moment and go through this tax return, and you'll be able to identify some things pretty easily too that just kind of, blew my mind when I was reading this. So I wanna start off saying that this tax return was actually paid, or the tax client paid $877 to prepare this tax return. Why am I bringing that up? It's because in this particular tax return, it'll actually be someone who was an employee and they also had a business on the side, okay? So this client or prospect, or what they were when they reached out to me, or as a prospect was an employee who had a sort of a side hustle, if you will, okay? So this might be the situation that you're in, but what I'm trying to say is they're a sole proprietorship, so they will have what's called a Schedule C, which we'll get into here in a moment. And wait till you see the Schedule C, all right? Which is where the business income and expenses are located. And by the way, on this return, there's a Schedule E. If that's your first time hearing that term, that's for rental property income. But guess what? She doesn't even have rental property, okay? I found out all of this when I had a conversation with her. So let's look at the return and kind of identify some of the issues here. So the first thing I noticed was that the very first mistake that you can make, the very first thing where there's even to check a box, it was done incorrectly. The people who prepared this return checked head of household when this person is actually single. They don't have any kids or anything like that. There's no reason why they should have checked the head of household box. And also, the tax preparer had checked the box saying that she had a dependent and listed a name here. When I asked the taxpayer what's going on here, they said, no, I don't have any dependents, I don't have any children, I don't have any family members that live with me that I could claim as a dependent or anything like that. So I thought that was, eye-opening right off, right from the get-go. I obviously blacked out that information so you couldn't see what some of that stuff is, but let's continue down here and look at some of these other mistakes that occurred. So number one, line one, was wages. This is how much they earned as a W-2 employee working for an employer somewhere. That's really hard to screw up. You get that in the mail. It's your W-2 amount, right? The amount of income you earn at your job. You plug that figure in. That was basically the only thing on here that was 100% correct. Moving along, let's go to line 8, other income from Schedule 1, line 10. Well, the problem here was the tax preparer didn't even include a Schedule 1 for the taxpayer to even view. So I was like, okay, well, that's a little bit strange. After looking at the return, I was able to figure it out. But normally a Schedule 1 looks like this. It's part of the 1040 tax return. Okay, and so you see here, business income, $31,325. So that's actually the profit from the business, right? In your business, you have revenue, right? And then you have expenses, and then you have profit. So all this says, although this says business income, really it means the profit from the business. So they put this as $31,325. Then I mentioned earlier, they had a real estate rental loss of over $25,000. Now keep in mind, as I said a moment ago, I asked the taxpayer, do you have rental property? Do you have anything like that going on? She said no. Okay, what the heck? So scrolling down, you sum these two lines together and you get $6,184, which is what was originally written here. So now that I mentioned that, let me show you one more thing on the Schedule 1 that I found. Below here is some other items. I'm gonna highlight this one, row 20, IRA deduction. So I gotta actually ask this person if they actually made an IRA contribution for 2021, but if they did and it was $6,000, well, you'll see where I don't think they've even should have been able to do that. So we'll come back to that here in a moment. So we look at Where are we at? Schedule, we're still on the form 1040, line number 8, other income. I told you 6,184 is what the tax preparer wrote. And I corrected this number as 54,328. So that's off by quite a little. Let me show you what you did here. So I told you the taxpayer, it's a she did some consulting work in addition to her W-2 income. So she would have to complete a Schedule C, which was completed. Scrolling down here. So let's look at this for a moment. Again, I blacked out the information that I didn't want you to see to identify this person. So first thing's wrong is that this code, I refer to it as a NAICS code, N-A-I-C-S, that's the acronym, is the default 99999, which usually you put in there if you can't figure out whatever it goes to. And then they also wrote that this person is sales. So they're saying this side hustle has to do with sales. Well, you know, both of those items are wrong. And if they did identify that this was sales, then they should have found a number or a NAICS code that related to the type of sales that you did. But I guess this tax preparer was so lazy that they didn't even want to look it up or ask. They just entered in whatever. Now they got the income correct, right? The gross receipts, if you will, the revenue was 74,382. That's how much she earned doing this side hustle, okay? And when I kind of took a look at this, there was these yellow highlighted items are things that glared out to me and should be alarming to you as well. Number 9, car and truck expenses. This was 6,633. Where does that come from? Well, let's look at part 4 down here. The tax preparer said that, hey, this person drove their vehicle 11,845 miles for business, 4,325 for just commuting, and 1,984 miles. I think if you add that up, it's 18,154 miles that this person, who by the way is a consultant who does all of their work online, drove during 2021. All right, and so let's forget these amounts for a moment. Let's focus on the business. They don't drive this much. This would mean that they drove almost 1,000 miles a month for business, okay? So, you know, let's give the taxpayer like 100 miles a month that she drove, and that's probably being generous. That's 1,200 miles. You multiply that by the mileage rate for 2021 was 56 cents. So her deduction actually should be $672. So what I'm trying to say here, instead of 6,633, it should be 672. So we identified that there's probably an understatement of profit by about $6,000 already. All right. Next up, mortgage. Well, yeah, this person is a homeowner, but their business doesn't own a piece of property that has a mortgage. So this $2,280, it's just complete garbage. It doesn't even belong here. It's just a made up number. So that is another $2,280 in understated profit. Over here, line 20A and B, she did not rent any vehicles or other business property as noted on these line items. So that's another $6,000, if you add those two together, another $6,428 in understated profit. Let me show you a couple other things. Over here, which says other expenses, usually there's a breakdown of what this is. So I took a quick look. I scrolled down here, just as you can do on your return. Make sure you kind of follow along with me with your own return in case you identify something here that's wrong on yours too. Okay, so the tax preparer said, oh yeah, you get a deduction for your clothes and your shoes. Okay, again, this person's a consultant, does all their work online. They don't have like actual uniforms. Like where you can deduct clothes and perhaps shoes. Let's say you're a construction worker and you wear clothes that you would only wear on the construction site. Picture like a hazmat suit or like a plumbing shirt or a mechanic shirt and clothes or something like that. Or the shoes, let's say there's like some steel toe boots that you must wear for work. You're not going to wear them outside of work. So if something falls on your foot, your feet, you know, don't get damaged and you don't have an injury. That's what you can deduct. Okay, you can't deduct a pair of Louis Vuitton shoes. Okay, so anyway, that's $8,007 in just like deductions that would just scream out to an IRS auditor, oh, let's take a look at this. There's no way they purchased this much, okay? Work tools, I didn't ding them for this, but this is probably made up too, but let's just assume it's correct. So we have a total understatement of Schedule C income of about $23,000, okay? I said the word income, I mean profit. So if you look back at the return, I made these notes in red, right, to give you the real numbers. That's why this number is increasing. It's not increasing to 54,328 just yet. I'm going to show you that here in a second. It's blow your mind. So I mentioned that rental income, when I showed you the Schedule 1, was negative, right? That's up here, negative. Look at this. There's a Schedule E, which is where you would put your rental income and expenses. I asked the taxpayer, do you have a rental property? She said no. I asked, do you rent it out to your own property to someone else? She says no. Okay, well, there's a Schedule E, and I blacked it out here. I mentioned that earlier for privacy reasons. But this address is the same address that she resides at, which is also written on the return, right? So that's kind of a red flag, like, hey, okay, you're renting at your own home. It happens. You can do that, but not like this. So they just, I guess, made up these numbers, $6,000 in rental income, and they put these expenses and insurance and repairs to the property and all this stuff, and came up with a $25,180 loss. Well, all of this is nonsense. There is no loss, there is no gain, there's no income at all. It should be $0. This schedule shouldn't even exist in this taxpayer's return, okay? So that's why when I showed you up above that I had to increase this number just for purposes of creating this video to $54,328, all right? So you total these up together, you get $145,677. Adjustments to income, it was a higher number, $8,213. Earlier, I mentioned the $6,000 IRA deduction. Well, you could see here, she also rolled over money from a retirement account, which leads me to believe she was probably participating in her employer's retirement program before she left there, right? And so I think this is an error, okay? Because if you are participating in your employer's retirement program, then there is some income limitations to how much, or if you would even be able to contribute to a traditional IRA. And she's crossed that threshold because of these adjustments that we've made, all right? So I don't even think she could have taken that $6,000, which is why this number is different. It's different also for some other reasons, but I won't get into all of that. So anyway, you could see her taxable income is more like $119,000, because even the standard deduction change, it was head of household, now it's just single, and some other changes here related to her tax return. And so her taxable income is now $119,191, not the $70,000 that was there before. And as a result, I'm going to scroll down rather fast here, she owes $16,251 and a little bit of a penalty. That penalty would probably be higher if this person was audited, because there would be penalties and fines perhaps as well. So you could see that this thing was just a mess. Let's look at some other things in the return to keep in mind about what you're doing when a tax preparer sends you a return and you're signing it. You need to read some of the things of what you're signing, right? Let's look at this here. It says, I know it might be small on your screen, under penalties of perjury, I declare that I have examined this return and accompanying schedules and statements, and to the best of my knowledge and belief, they are true, correct, and complete. Declaration of preparer, other than, we don't have to read that part, but basically it's saying like, hey, yeah, someone else prepared this for me, but I still reviewed it and it seems accurate to me based on my understanding of how this all, went down. These are all true and it's complete, okay? Let's scroll down a little bit further. I won't harp on this too much more, but I just do want to show you this. The tax preparer must complete this due diligence checklist. Let's look at a couple items on here. Did you ask the taxpayer whether he or she could provide documentation to substantiate eligibility for the credits and or head of household filing status? They've clicked yes, but that's clearly not the case. Let's look at this other one. If the taxpayer is reporting self-employment income, that's if you're taxed as a sole proprietor, you might be an independent contractor, for example. Did you ask questions to prepare a complete and correct Schedule C? Yes. I don't think that's true. So the tax preparer here could be on the line. Look what they have to answer to. Did you certify that all the answers on this form 8867 are, to the best of your knowledge, true, correct, and complete? Yes. That clearly wasn't done, right? It's quite obvious. The point is this. I know I went into a lot of detail here, but the point is this. You need to hire a professional to prepare your tax return because a professional has more on the line, such as their reputation, maybe their CPA license, etc., that they likely wouldn't participate in this kind of nonsense when preparing a return because they want to be in business for a long period of time. Also, it goes to show you, and I can prove this out to you, the way they build this, this taxpayer, and the amount they billed, $877.02, all right? So it goes to show you that just because someone is charging you $800+ to prepare a return doesn't mean it's going to be done correctly. You might think, oh, wow, that's a lot of money. It must have gone through a CPA or, something like that. That's not always the case. And I guess lastly, one of the points I want to make, actually there's a few more points, but one thing I want to say is you don't even have to resort to things like this to save money. There are plenty of tax strategies that can be implemented to reduce the amount of taxes owed, okay? So for this particular taxpayer, they could have maybe properly deducted their home office, gotten some mileage deductions, contributed to a solo 401k maybe, right? And it would have been more than just the $6,000 that they incorrectly deducted. They probably could have contributed more. Perhaps we could have used the S-Corp strategy to save a couple $1,000s in Social Security and Medicare taxes, all right? So I just wanted to show you this. I thought it was pretty alarming. I actually had another tax return I was going to show you, but I decided this one was long enough. It had enough errors to share with you. So let me show you a couple other resources. If you got value out of this, you learned something in this, you have some takeaways, let me know in the comments below. Tell me like what you observed. Was your tax return ever screwed up before by someone who's preparing your tax return? What errors did you identify? On my website, if you go visit it, it's navimuradcpa.com. There are some resources here. I mentioned tax strategies a moment ago. If you're an entrepreneur, and you want to learn about all the tax strategies that I help my clients implement so you can kind of do this stuff on your own, you can. The problem is no one's really teaching it in an easy way, but I tend to teach things in a very easy to follow way that's very understandable. So you can click here on this link and it'll take you to the course page and teach you exactly what's in here, all the things you're going to learn, all the value that you're getting, and there's a coupon code and all that great stuff. You can have a look at it, okay? But also here are some other resources if you need to prepare or file an LLC or an S corporation. You can do that here. You can ask me questions. You can go on here and schedule some sessions with me, so forth and so on, all right? But if you're watching this on YouTube, I put the link to the course directly in the description below. If not, go to my website. And before I wrap up, be sure, again, to leave me a note in the comment section letting me know what you learned. Was this helpful? What else do you want to understand better? Did I lose you while going over some of this? I want to know so I can create better content for you. Coming up here are going to be some videos, one of which I'm going to recommend that you watch after watching this one. It talks about the different types of tax preparers out there. So your basic tax preparer, a CPA, and then working with a tax strategist who may also be a CPA, right? And you'll learn that, yeah, the CPA will do things correctly, okay, whereas this was clearly not done correctly. But the tax strategist is who you'll really want to be working with because they're going to implement strategies to help reduce your taxable income so that you save more money in taxes, all right? Don't forget before you leave to like this video and subscribe, and I'll see you, I'll see you either in the course or in the next video.